The annual rate of inflation in Australia has fallen to its lowest level in 2 years, dropping in November to 4.3%. Business reporter Edward Boyd has the details.
The good news today coming out from the Bureau of Statistics was inflation has fallen a little bit more than what economists anticipated. They were expecting it to print in the month of November at an annual rate of 4.4%. Instead, inflation came in at 4.3%. And that's the lowest level since January 2022, when inflation was 4%. So a good news here on the economic front. But if we go to the next slide, we can look at some of the categories, some pretty important categories for household budgets that have still been increasing in costs. You can see one of the big contributors was rents, up about 7.1% over the 12 months to November 2023. Electricity prices up almost 11%, so they're still rising very sharply. Gas obviously goes into that electricity basket as well, up about 13%. Petrol, though, was up significantly earlier towards the middle of 2023 and is coming down, but still up 2% when compared to November the year before. Food and drinks, things that you buy at the supermarket, still up almost 5% over a 12-month period. So the good news is inflation is starting to cool off. It has been cooling off really since it printed above 8% in December a year ago. And it is coming down. It's coming down not as quickly as many people would like, but we are starting to see inflation fall. And the confirmation today that it's a little bit lower than anticipated at 4.3%. That's good news for Australians, because we all want to see inflation get back to the level that the Reserve Bank wants, which is that 2 to 3% window.
And joining me now live is AMP Chief Economist Shane Oliver. Shane, thanks so much for joining us. What's your reaction to these numbers today?
Look, I think you have to see these numbers as very good. This is the second month in a row where inflation has fallen faster than expected. Yes, we're still seeing uncomfortably strong rises in prices for housing-related costs, whether it's buying a dwelling or renting, and also energy, electricity and gas in particular. And, of course, also insurance you'd throw into that. But the trend is down. We did see inflation peak at 8.4%. Now it's 4.3%. We had some very high numbers in December last year. When the December numbers come out in 3 weeks' time, those very high numbers, particularly for travel, will drop out. Don't forget, last December, travel costs rose 27% in 1 month. So that's going to drop out, and the likelihood is that when we get the next update for December, we'll see inflation in the threes, possibly as low as 3.3%. So I think things are clearly going in the right direction here. The Reserve Bank has become too negative, too pessimistic on inflation, and the likelihood is that they won't need to raise interest rates again.
So if the trend is then heading in the right direction, as you say, do you think that interest rates have peaked based on these inflation numbers?
Well, I thought they'd peaked prior to this, but these numbers confirm that. Yes, there's still a risk there that they will move, but I think the RBA's own inflation forecasts are now looking a little bit too pessimistic, and the likelihood is that this clears the way, or helps clear the way, for rate cuts through this year, probably starting as early as June. Even the underlying measures of inflation are coming down. The so-called trim mean fell. If you exclude volatile items, it fell. Clothing prices are down on a year ago. Household equipment prices are down on a year ago. So we are seeing some pretty good readings in here. And it's also following the trend we've seen internationally, where the US and Europe peaked before us because they went up before us. And we're following them down. So good news, and I think it does mean rates have peaked.
Overall, what does the state of the economy look like, and what is the likelihood of recession now?
Well, the clear good news is that inflation is falling. That's been the big problem for the last couple of years. And ultimately, that will mean lower interest rates, not immediately, but a few months, 6 months down the track, we will start to see lower interest rates. I guess the downside, though, is that it's hard to believe that after such a massive rise in interest rates, there won't be some economic fallout. Part of the reason inflation is falling is because demand is slowing. People are hanging out for the discounts because they don't have the spending power they once had. And that obviously does run the risk of recession, and we think that risk of recession is high at around 40%. So far, we've managed to avoid that, which is good news. The economy has proven far more resilient, but that risk is still there. And we know from the experience of the late 1980s, early 1990s, that it can take a while for the full impact of rate hikes to slow. So increasingly, as we go through this year, I think slower economic growth will become the concern, but the light at the end of the tunnel is clearly there. Inflation is down, interest rates will follow.